Hey everyone, if you rewind the clock to about a year ago, virtually every economist out there expected us to be in a recession by now. At that time, inflation was still very high, the Fed was pushing rates very aggressively, consumer sentiment was flirting with an all-time low, and the yield curve was inverted. And if you go back and watch some of my videos from last year, you may notice that I was suggesting that a soft landing was possible. My argument was that the exceptionally tight labor market, together with the trillions of dollars of excess savings, could pull the economy through to a soft landing if the Federal Reserve didn't push rates too far. But that was the big question. Would the Fed go too far? Today, we're not in a recession, and most of the economists are now saying a soft landing is likely. In fact, Goldman Sachs recently cut their probability of a recession within the next 12 months to just 15%. And it has even been suggested that a soft landing is now the Fed's baseline scenario. But what could go wrong? Investors always need to consider their downside risk, and now that most economists are leaning toward a more positive outlook, I want to make sure we're covering the potential risks as well. Right now, I'm monitoring 5 potential risks that could derail a soft landing. The first on my list is the Federal Reserve. They could still raise rates too much, or they could hold them too high for too long into 2024. At the last Fed meeting in September, 12 of the 19 voting members of the Federal Open Market Committee indicated they believe one more rate hike will be needed this year. That doesn't mean they'll still think that way when they make their next rate decision on November 1st, but it is a risk. In addition, many of the Fed decision makers think they'll need to keep rates elevated through most of 2024, and that could also create economic risk. The second thing that could derail a soft landing would be a significant pullback in consumption. Retail sales growth has already begun to flatten out, and the excess savings built up during the pandemic that has been fueling a lot of the spending will likely burn off by the end of the year. On top of that, student loan repayments have restarted, and that will reduce the discretionary spending of about 44 million people. A third downside risk is tied to interest rates. Not only do commercial real estate investors face significantly higher interest rates as debt comes due, but so do businesses and consumers. As companies roll over their debt, they're going to have to deal with much higher rates, just like real estate investors are. And that could be a problem for some companies, especially the ones with significant leverage. As debt comes due and companies roll it over at a higher interest rate, money will be taken away from other investments like growing infrastructure or hiring more staff. So that could emerge as a challenge for the economy. A fourth potential recession driver could come from the banking and financial system. Although it looks like banks have stabilized, at least compared to last spring, there's still a possibility their balance sheets could be impacted as debts come due. That could be commercial real estate mortgages, or business loans, or consumer loans, or something else. If even one significant bank runs into collection problems or debt maturity problems, we could see another bank run that could squeeze the liquidity out of the lending markets. And the fifth risk I'm monitoring is a range of potential extraneous events, things that could drive a shock through the economy. Things like a government shutdown, major union strikes, surging oil prices, global geopolitical risks, a global recession, and so on. These types of issues are always out there, and although it doesn't look like a major issue is imminent, we always need to be vigilant. That said, I do want to reiterate, right now, the economic outlook through the remainder of this year looks solid. We'll likely end 2023 with total annual growth in the 2% range. And although most economic forecasts for 2024 aren't huge, they are positive, with consensus estimates of about 1% growth. If we hit those numbers, 2024 could be a very solid year for commercial real estate. But as always, investors need to keep their eyes on the horizon.